Okay, let's get into it. Quick update. All right, straight into the charts. Just wanted to do another update because it's been a while, just at the start of the year, and we're pretty much at the end of March, which is when I sort of expected the turning point to be. We haven't quite hit the target. I expected somewhere up around the 35k mark, pretty close to that. One thing though is it does look like we've got a little bit left in this. So the reason I say that is because it looks like we may be forming a little bit of bullish divergence on the stochastic momentum index. That would typically see us push up to that 35 from here, I would think. Okay. There is obviously, there's a lot of vectors down here, so there's a lot of liquidity to grab in this area. But at the moment, we're just sort of trading sideways in this range. Now, the stochastic momentum indicator is this curve in here. I would like to see that hit underneath this extreme before going up again. But if we do turn around here, this is on the daily, this is on the 4 hour. If we do turn around here, then it is still quite bullish. Now, this other stochastic indicator that I've got over the top here is suggesting we tick up. So this might have been a little bit of a fake out. If we do close back above this 50 EMA, then it would look very good for another push up. If we don't, then this could be a little bit of a fake out here, this little increase. So we've recovered this vector candle. We've recovered all the other sort of 4 hour vector candles in here. So the nearest vector is actually below. And to be honest with you, it's actually like the nearest decent one would be back around here, around 23k. Do I think it's going there? Not really. We've still got a little bit of upward momentum left on this, 1 hour. It's failed to sort of retest the 50 at this stage. If this hourly candle closes above the 50 and above this 200 EMA, the white one, on the 1 hour, then I would expect it to continue up for a bit. But at this stage, we're kind of in no man's land. Longer term time frames, the stochastic momentum here, the fact that this is so overextended to the upside suggests that we probably will come back down a little bit more. If we break, I've told a few others, I'm kind of expecting we could get down to around that 24 and a half region, back into this supply zone here. That's going to be a critical point. If we break below that, we're going to be recovering the majority of this. So I would expect us to go back down and retest these lows. Potentially, if there's a major market shift globally, which is also on the cards, we will come down and probably recapture these vector candles as well. So we're talking back down into the 17Ks at least. Am I expecting that soon? Not really. I actually think we sort of go sideways and maybe grind up a little bit in the markets over the next couple of months. I don't think the financial stuff is going to hit global economy wise for maybe another 6 months. We've never seen a recession called in the 3rd year of a presidential term in the US. We are in that 3rd year at the moment. That's a fairly major statistic. even though it's kind of anecdotal in a way. It doesn't necessarily represent what I would call a real statistic. It's hard to argue with something that's been going on that long. So, look, it looks like there's some downside about to occur. We haven't really been able to properly clear this 800 EMA on the daily. On Bitcoin, that's a fairly major zone. So I'm sort of looking more towards this 50 EMA here as a retest. If we get support at the 50, then I would expect us to be headed back up to about that 35k zone before we get any major market meltdown. That's kind of where I'm leaning towards this is probably going to go. I'd be surprised if this is just a recovery to this point and then a major down to all-time new lows. I think we need to see, especially since we're getting close to the halving. This is pretty typical of the point where Bitcoin turns, maybe one more drop, and then heads back up and continues up to the next all-time high. So I'm kind of expecting it to be a major market issue that will cause drop in value across all assets, and then you'll probably see Bitcoin come back down. For the time being, though, I think this is just another stop on the way up. But yeah, a decent retrace like we had here. We had a fairly good retrace before it pumped back up. That one there, it didn't hold the 50 EMA or the 200, but it did come back to the middle of the bands for the Bollinger Bands. So they're sort of the critical areas I'm looking at. I do expect it just to be the 50 EMA here, though. If we get down that far, even there is a potential for it to actually head up from this point. As you can see in the 4 hour, the 4 hours suggesting we could go on a decent run, but expect sort of a choppy run up at this stage. That's about it, really. Ethereum, it's actually done pretty well, but it's now tested the 800 EMA on the daily, and it couldn't break through at all. It didn't even close anything above there, unlike Bitcoin. It's a bit closer to the 50 EMA, so don't be surprised if we get retests around that 1640, maybe even the 1570 mark over the next couple of weeks, especially since, again, the daily is pretty overextended on the momentum indicator. Again, it looks like we've got some bullish divergence happening on the stochastic indicator on the 4 hour. That's fairly bullish, and given this other stochastic, this is a longer time frame one, is down at the moment, you are expecting things to head up from somewhere around here. So kind of whether it goes up, sort of, it could actually come just down, recover this blue vector and then head up. But the fact we have a blue vector here kind of suggests that it may be a stopping volume candle. So the market makers doesn't want it to go higher at this stage. It's just a fake out trying to suck people into the longs and then bring it back down. That's typically what you may see before a drop. But the market's kind of indecisive at the moment, which is representative of global markets. Really, it's people are scared at the moment in trading. The markets seem very nervous, very choppy, very sideways. So that's about it, really. As you can see, this is the daily for the S&P 500 futures, and yeah, when you look at it, there hasn't been many times in history where we've had a drop and then we've really chopped this hard. And I think a lot of this is due to the interventions of the Fed. We've never really had monetary policy playing this big a part in it. in the past. So yeah, this market is right in the middle of nowhere. It's could go either way from here. I have a feeling it'll go up, even though we are a bit overextended on this particular stochastic here. You know, the direction indicator is kind of suggesting that there is no direction at the moment. So we'll just have to wait and see. I think we need this to come back down again. Probably another retest, maybe a double bottom around here, around the 800 EMA, and then we head back up again. It's very dependent on news now. Like for the next probably year, the market's going to go back to fundamentals, news driven, and earnings driven for the general market. So I guess watch out for the Russell. The Russell's probably the canary in the coal mine here. Don't have it up at the moment. If the Russell, Jesus, struggle. If the Russell breaks this area, this particular area here, so 164 on this index, then it's probably going to drag the rest of the market down, mainly because the Russell's got a lot of rural banks in it, and a lot of small cap businesses, probably a lot of your zombie companies, stuff like that, are going to be shown up in the Russell. So if we get a major move to the downside on the Russell, like if we melt down from here, then that's probably going to be a bit of a forward indicator that the rest of the market's going to crap its stacks. So keep an eye out for that one. That's about it for today. Hope this was helpful. I'll talk to you next time.